Hello, everybody. How are you, Lloyd? Hi,
Hi, Orlando.
hey. All right, so
Yeah,
let me just get rid of. How do you get rid of the background here?
I
I have
can
no
say
idea.
for now.
Yeah,
You put it on and you don't know how to get rid of it.
hold on. I'll figure it out. Hold on. Oh, yes, I know how. Video settings. Meeting always. Hold on.
Yeah, Orlando, are you actually on holiday now?
Ah?
I mean, are you actually vacationing at the moment?
No, no, not
Oh,
right now, mate.
I thought you were.
How do you do it? Virtual background. I don't want none. That's right. Here's my computer.
I can see you in your computer now.
Yeah. Hold on. I have a something here in my head. All right. So I'll change the camera later.
Wait,
Are we
you do
live?
realize that I'm looking at the right side of your face now only, right?
Yeah, I know, mate. I know. Hey, how are
Okay.
you? Hey, how's everybody going? How's everybody doing? I'm Orlando, and yeah, I'm sorry about that. That you have to look at the side of my face, but that's fine. Let's go ahead and let's move on. And I mean, we're going to have a great show today. U.S. elections. Hold on, U.S. elections today. So I mean, it's going to get volatile. And if you are not, I mean, if it's my advice to everybody listening out there, that if you're not an experienced trader or if you're not comfortable enough with trading in high volatility scenarios, just stay out. But take this day as an educational day, right? Because I do believe that we're going to get some fireworks. I don't know about you, Lloyd, but I am ready. And what I wanted to do today is I wanted to look at historically what happened during the 2016 election on the S&P 500, the Dow, gold, and the Nasdaq, right? And yeah, I mean, because I think that that it's important for I mean for our viewers to have an idea on how this might play out. But yeah. So, but to start, I mean, just to start, let me just share a little bit of the DXY and the zone that I was looking for a long continuation is here. Um, I really don't like how bearish this price action has been, and if we go to the hourly chart, I mean, it looks very bearish, and it looks like we have broken to the downside. So I'm not going to be playing longs on the US dollar today any longer. And I had the idea of shorting silver at these levels, but since we broke to the downside, I'm no longer invested in a US dollar long. But let's go back and let's have a look at the what the U.S. indices, right? I'm gonna have a look at the E-mini S&P 500. This is the E-mini S&P 500, the E-mini Dow, the E-mini Nasdaq, and gold futures, right? So the first thing I want to do is I want to go to November 8th, 2018, 2016. I'm sorry, election day. Uh, 4 years ago, and let's have a look at what happened then. Right, we had that. I mean, we had that big drop. I mean, every sheesh. Hold on, let me go back there where I was. Every single equity index fell that day, right? But the interesting thing is that they failed two key levels where buyers jumped in quite quickly, right? So what happened here is that I need my, uh, oh yeah, there you go. So this is the daily candle on the E-mini S&P 500 right here. And we had that, I mean, I'm gonna go back to the 2-hour chart later. I just wanna show you the levels that were played that day. right? So I had this level, or I mean, obviously this is in hindsight because this happened 4 years ago, but this is the level where buyers were picked up right after that flush, that initial flush on U.S. equities, most importantly the S&P 500, and I don't know what this data is taking so long to load, or if it's loading in the first place. I don't know. All right, let's go to another. Can everybody hear me? Can you hear me, Loy?
Yeah, I still can hear you.
Okay, cool. So it's on my internet. So we'll go back to the E-mini S&P 500. Let's go and let's have a look at gold 4 years ago. And this is quite interesting, right? In gold 4 years ago, because gold, what happened in gold is that we got a big push to the upside, a 5.53% push to the upside, and then a sell-off. Let's call it the immediate sell-off. I'm just going to measure the immediate sell-off for about 10% and 5 days. After the election, 5 days after the election, gold sold off for almost 10%. So keep that in mind, because what I'm expecting today is a rally. Oh, well, what I want to do is just to sell a rally to a key level. Now, the first key level would be the 1940 in gold. But this is, I mean, let's see where the daily open was today, or the daily low, I'm sorry. So today's daily low was this week, and from the daily low to the next key level, which is the 1940, it's only a 2.5% rally. Now, if we consider that the same scenario might play out again, I consider this rally to be too little, right? So from the daily low, I would be looking to these highs to sell gold on a 5.11 or 5.10% rally to around the 1990 level. So this would be an interesting area to sell gold, right? For the post-election, dip that we saw in 2016 for about 10%. Uh, well, so, I mean, someone asked me today that, I mean, if I was going to play both sides, the upside and the downside. My answer is no, uh, because I don't know how much gold is going to rally, or if it's going to rally at all. But if gold rallies, I will be looking for sales, right? So my only view here is to sell gold at a key level after a rally, after a considerable rally, right? So I will be waiting for at least. I mean, I cannot tell you for sure how big that rally is going to be, but based on 2016 um, data, we could see gold rally to the 1985 to 1990, where I will look for sales. No, so my only play on gold today is to sell it at a key level. Now let's go back to another chart, and the E-mini S&P 500 never came up, so I'm going just to retake it. I'm just going to change it to whatever chart. All right, go back to the E-mini S&P 500 to see if I get the data. Yeah, I got the data. So we are looking at the daily chart here on the E-mini S&P 500. Let me go big again, right? And let me go to the 4-hour chart. So the thing about futures chart that I just saw, I can't change. I mean, I'm not going to be changing the time frame when I'm looking at historic price action. So on the E-mini S&P 500, the play is the opposite, right? I will be looking to play longs if they pan out. Now let's have a look at how much the E-mini S&P 500 dropped last election. They dropped. I mean, the E-mini S&P 500 dropped 5.88%, or 500 points or ticks, 500 ticks. I don't know, but 5.80% to that buy zone, And after that, let's call it the immediate rally after that from low to high was about 35 days I'm sorry about that. That's a 35-day rally from that low to this high for about 12%. So this is why this is why I'm telling you that we might have some big opportunities to make some decent returns on these elections. If by analyzing historic price action or what happened historically in the past election, we can find some place in this election. So if we go back to today's price action, and if we grab here the previous day, the daily, just to look at the daily high. Now, if we consider that this is the daily high, right, and the S&P 500 will not hold on, I lost my mic. There you go.
Take it easy. Take it easy.
If we consider that this is the daily high, and we are expecting a 5.80 to 6% drop in the S&P 500, my buy zone would be this zone right here, around the 31.14, 31.15 to the 3200 level. So this entire zone would be the optimal buy zone on an S&P 500 flush, right? Now we have to remember that last election, that flush was when Donald Trump was, or when Hillary Clinton conceded. I don't remember, but it was because of that, right? And the thing about this election is that there's a lot more on the line, and we are not going to know the results of the election tonight, like we always do on past elections, because of the pandemic, of the coronavirus pandemic. There's a lot of Americans that have voted via mail. So the absentee ballot count is going to take a little longer. But what Donald Trump said is that if he is up considerably by the end of the day, he is going to declare victory, and he's going to go to the courts to try to stop the absentee ballot count. So it might be, and this is why I think it will get volatile, because of the range of news that the algorithms are going to be reacting to. But in any case, my play is not to buy the S&P 500 right now or to sell the S&P 500 right now. My only play, like in gold, is if I see a dip to this zone, I will buy the S&P 500, right? Remember that because of the volatility of the market today, you have to use a smaller size on your trades, because your stop losses have to be a lot wider. And my only play here on the S&P 500 would be a buy to this area. I don't know what you think about what I'm saying, Lloyd. But yeah.
Truthfully speaking, S&P, I'm not going to place any trade till next week. It is just too risky for me to do anything about it anymore. For S&P, for high volatile events, my fear is not fear of trading it, rather it's fear of what if there's always a possibility that I'm wrong, which is okay, but it gets more than my stop loss. I'll be like, oh shit, hits a fan.
Yeah, I agree with you. I agree with you. And I actually started to wind down all of my trades. Right now, I'm just holding a long on the FTSE, and I had about 5 trades this morning, but I started to wind them down because I didn't want to hold any big positions throughout this day, because it's going to get crazy, right? This is going to affect global markets. Let's be honest. And this was my play on the FTSE. I'm still holding a little bit of that one, and I'm okay. But I'm okay if I get stopped out or break even on this one. Maybe I'll close it later. I don't know. but I'm definitely not going to be placing any trades other than what I'm just telling you, right? Only if I see that exact scenario. That's my play for today. I'm sorry, I'm not looking to place any day trades. I'm not looking to place any speculative entries. I'm just looking at these exact scenarios, right? A rally a rally to selling gold, a dip to buy the S&P 500, the Dow, and the Nasdaq. Now let's have a look at the Nasdaq, because again, I have a buy zone on the Nasdaq. This is the E-mini Nasdaq futures, and the Nasdaq. Well, this is my least favorite scenario, and the one that I'm not going to be looking at um, a lot. Why? Because of this. Right, the last election, the Nasdaq dropped again 5.8%, and it quickly moved up, and it raised all the losses within one day, rallying 7%. But after that 7% rally, the Nasdaq dropped again, right, about 4.22% within 12 hours. So that is extremely volatile, right? And what I'm looking for right here, I mean, what I'm really looking for, Loy, is an opportunity like the one that we just saw in gold, or the S&P 500, to nail that level on that exact scenario that I'm talking about, for a swing trade, right? To hold that for a nice, for example, we saw that after that drop, after that 6% drop on the S&P 500, the S&P 500 rallied. What was it, 12% or 13% for 35 days. So that's a 1 month hold on the S&P 500, which is and it wasn't as choppy as what we're looking at right here on the Nasdaq. And that's what I'm looking for the opportunity to really get on a perfect risk to reward scenario for a big win. And I believe that the Nasdaq is not the market to do so, but still, I'm going to tell you my buy zones on the Nasdaq, right? So this double bottom right here around the 10,720, which is also this level right here where we picked up buyers. I mean, this is the big level on the Nasdaq. And to be completely honest, this is the big level that I have been waiting for a long time. Actually, I tried to buy the Nasdaq here, got stopped out, which is fine. I mean, losses are part of the game. But when we broke with this level, I was no longer looking for buys until we hit this level, but we never did hit this level, right? And I was never going to place a trade in the middle of nowhere. So what's the plan here? The plan here is that, would be, in any case, to see a big drop on the NASDAQ. Let's again look at the daily open just to see where we're placed at. I mean, the daily high is here. I mean, the range on the NASDAQ today is nothing. It's 1%. Well, that's not nothing, but again, if the Nasdaq rally, I mean, and these are big ifs, if the Nasdaq rallies today here, and by the end of the day, and when I'm talking about the end of the day, I'm not talking about the end of the New York session. I'm talking about the end of the actual day on which we are going to be live for that election show. Do not miss that one. It's going to be awesome. I again lost my mic. Yeah, I lost my microphone again. I'm sorry. Here it is. Hold on.
You
There
need
you
a
go.
wireless mic.
Yeah, no, it's wireless, but I keep losing it. I mean, I didn't plug it correctly. So I was saying, if the Nasdaq rallies to that level, and by the end of the day, I mean, not to that level exactly, but to whatever level it is, we might get high enough to see a big 5.6 to 6% drop on to this level. And again, I need to repeat. I need to be clear on this. Even if I see the Nasdaq, I mean, for example, if the Nasdaq continues to trade inside of this horrible range, right? And if I see the Nasdaq dropping, let's say that the Nasdaq is at this level, and I see the Nasdaq dropping again 6%. But it's not to my buy zone. I'm not gonna buy it. My only play would be buys on the levels that I just showed you in US equities, and sells to the levels that I just showed you in gold. I mean, if gold rallies to, to around the 1960, 1970. Well, gold is different because there are some levels that we could be playing here. For example, the 1962, right? So a rally to the 1962, right? A rejection. I would be keen to sell gold at this level. Definitely not at the previous weekly highs at all, but around these levels would be nice. And only if I see price rejecting this level would I get in on a mild position. Remember, because I mean, if I get into a short here in gold, my stop losses are going to be all the way up here. So my position size is going to be smaller, right? Because I don't know if we are going to continue rallying to this level, right? Before the drop. So my ultimate stops would have to be all the way above that high. I haven't figured out my trading plan just yet. I'm just sharing my sell zones, right? My entire sell zone here in gold would be here, actually. So yeah, my stop loss would have to be above the 2000 level. And because it's such a big level, the 2000 level, right? Could be pretty plausible that we get that. Again, these are just scenarios that I'm considering. I don't know if this is going to happen. It might really not happen, but this is what I'm looking for uh, to this trading day, and nothing else at
Actually,
all.
for Go, can I share something with you?
Yeah, yeah. Go ahead. I'm sorry.
No, problem.
Drop
Yeah,
the-
since you're talking about Go, I'll share my observation with you about Go. Is
Yeah,
that
yeah, yeah, yeah.
uh, I don't I don't really frequently trade gold that much. I mean, gold and silver is more or less the same. What happens with commodities when I trade them is that even if the same strategy, that means the inside bar breakout, is that I will hope that, not I will hope, what I observe is that if it breaks, usually it should go off. It shouldn't come back and retest a particular my particular level. If it comes back and retest, usually it doesn't really mean any good thing. So what I meant by that is that, so if you look at here,
Uh-huh.
price break, it go.
Where are you looking? Ah, I'm sorry. Yeah.
Yeah, so if price breaks, it should go up. So this one didn't really have any break. So this one price break, retest, that shit hits the roof. So
And
price
so
break,
what
it
are you
goes
saying?
off.
What are you
So what
saying
I'm
to me?
saying now is that from the 2 weeks ago, I have an inside bar. Price
Yeah.
break now is coming back to retest. Usually the retest that means that that the breakout failed. So it should actually either consolidate more or rally or go back to the go up to the long side.
The long side, but it broke to the downside, Lloyd. I mean,
Yeah,
this is.
precisely. That's what I'm saying. So every time it break but come
Oh,
back and retest, it will actually go up.
fake
So
outs.
yeah, so we should actually see, if for commodities especially, if it breaks, it should just go off. See, the moment it breaks and come back and retest, it is not good. See, breaks, it should just go off. Break, it should just go off. Break, come back and retest, not a good thing. Break, come back and retest, not a good thing. So technically speaking, from the way I trade and what I observe is that every
Uh-huh.
time it come back and retest, it either is just going to shoot back up the opposite direction of where it breaks, or it's just going to consolidate more, which is also not good for trend trading in a way. Yeah, that's what I wanted to
Okay.
point out.
Well, there you go, people. There you go. Another way to look at the market. I mean, that's the beauty about trading, man. Because you gave me something to think about, right? Uh, on my idea on how I might play today's levels, today's trades, right? That's a great insight, Lloyd. Thank you.
I mean, I don't really trade commodities that much, but it's just a
I just
small
trade
time
gold and silver.
observation.
I just trade gold and silver, and yeah, but it makes sense. I mean, what you're saying makes completely and absolutely sense, right? I think that we are out of time. Our show is only 30 minutes. Do we have the New York Open show right now? I don't know, but if we do, you should stick around. Again, let me remind you that tomorrow we do have that in about 17 hours or so, we have um, that election. That election show is going to be great. We're all going to be here sharing our thoughts on the election, watching the markets, watching the results. You should definitely tune in. And again, thank you, Lloyd, for joining me. And I'll see you later today, right?
Wait, the election show, what time is it? I also forgot.
It's 6:55.
Wait, so it's Singapore time, I forgot. I don't know, I'll figure it out. Anyway, after this, I got my TTR show. I need to go off first.
Go ahead.
So anyway, I'll speak to you later during the election show and see what sort of interesting thing that might pop up.
Okay. Are you going to share something? What is that? Are you going to share that? I mean, I think we have time for that.
I think we have 5 more minutes for it. Yeah. With all the saying that comes and go, I'm just gonna say that I will possibly be trading this Kiwi dollar long. Simply price broke up, and I have a low test bar. I mean, it didn't really quite tested the high of the range. So I was, and considering that it's still an election, I'll be just placing a trade, but at very low risk, and see how it turns out. I mean, being done and say, oh, that this is still a setup for me.
Mm-hmm.
Yeah,
I mean, the Kiwi, that Kiwi long, the Kiwi dollar long. I mean, to me, the Kiwi dollar has been quite difficult to trade with me. I've been stopped out at break even twice already, and that long really makes sense actually. But I mean, I haven't read too much. I haven't done my research too much on the Kiwi economy, but it does make sense. And where will your targets be?
We still be the usual 3:1. So if I do actually jump to this particular trade, assuming the levels are here, then yeah.
There's the bingo.
There's the bingo, 0.673 thereabouts. I think due to the election, I will be more conservative. I'll just aim for this instead. 2:1, at least the previous high. I don't want to be too aggressive about it.
Yeah, I mean, we should trade carefully today, right?
Yeah. Who knows what will happen? I mean, out of nowhere, Trump might come out and say the results are shit. And then
yeah, I mean, that's exactly what scares me. You know that. And did you read that he's building an unclimbable fence around the White House? I mean, this is going to get crazy, and even more crazy if by the end of today he's down on the voting count, right? I don't know what's going to happen, but yeah, I mean, it's going to be great as an entertainment. From an entertainment point of view, I'm going to love today.
A great messy day.
Yeah. All right. So we are out of time. Thank you for joining us, everybody. And don't forget that election show is going to be great. We're going to have a few laughs about what's going on. And of course, we're going to have a look at the market's reaction on everything that the news is pumping out. So thank you. Cheers. Goodbye. Bye, Lloyd.
Bye, everyone. Goodbye.